Secretary of the branch, CA Prashant Kumar. Learned speaker of today's session, CA M.V.Sarma garu, past chairman of our branch. Senior members of the profession, respected past chairman, members of the managing committee, my dear professional colleagues, a very good evening to you all and welcome you all to this 6th day and the last day of direct taxes SHASHTOTSAV, a week-long webinars on direct taxes, and today's webinar on the topic, a detailed study of presumptive taxation. We, the members of Visakhapatnam branch, convey our heartful thanks to the speaker, CA M.V.Sarma garu, for accepting our request to address the members of Visakhapatnam branch. In fact, during a normal discussion, when I revealed my idea of organizing a week-long webinars on various topics under income tax, he is the person suggested and designed this entire program, and with repeated requests, he accepted to be as one of the speakers, that too due to non-availability of few other speakers chosen. Thank you very much, sir, for your commitment in Visakhapatnam branch to it and its members. To give relief to small taxpayers from the tedious job of maintenance of books of accounts and from getting the accounts audited, the Income Tax Act has framed the presumptive taxation scheme under sections 44 AD, section 44 ADA, and section 44 AE. A person opting for presumptive taxation scheme can declare income at a prescribed rate. To be eligible for this scheme, the assessee should be an individual, a HF, or a partnership firm. LLPs and companies cannot make use of this scheme. The assessee shall not be engaged in the specified profession. The assessee should not have claim deductions under section 10A, 10AA, 10B, 10BA, 80HH, 80RRB. The turnover of the assessee should not exceed 2 crore rupees. These are all the eligibilities for this scheme. For questions like why this scheme is introduced under this Income Tax Act, for whom the presumptive taxation scheme is designed, that is, who are all eligible, which business are not covered under the presumptive taxation scheme like the agency commission or insurance agents, etc. What is the turnover or gross receipts limit up to which one can opt this presumptive tax scheme? Further, is the turnover is inclusive of taxes, cess, and duties, or exclusive? What are the changes or amendments from earlier years? Clarity with regard to non-maintenance of books of accounts, applicability of payment of advance tax under this scheme, provisions about the scheme under section 44 AE to give relief to small taxpayers engaged in the business of flying, hiring, or leasing of goods carrier, rules and regulations about the number of vehicles and gross weight of vehicles and applicable amounts, so on and so forth. To make it clear about many other questions and doubts in the minds of assessors as well as tax professionals, we have eminent speaker CA M.V.Sarma garu with us today. Let us gain thorough knowledge with his deliberations on the topic. Now I request CS Ravanti to introduce the speaker of today's webinar.
Good evening all. CA M.V.Sarma, popularly known as M.V.Sarma garu, did his commerce graduation at Government Arts College, Rajahmundry. He did his CA articles at V. Achyutaramaiah and Co. Rajahmundry. He has been practicing for the past 2.5 decades in Visakhapatnam in the areas of taxation and audits. He was elected as chairman of Visakhapatnam branch of SARC of the Institute of Chartered Accountants of India, New Delhi for the year 2009-10. During his tenure, the branch adjudged as the Best Branch Award by the ICAI. He was elected as secretary of Visakhapatnam branch of ICAI for the year 2008-9. He was co-opted member of Committee on Public Finance and Government Accounting of Southern India Regional Council of ICAI for the year 2011 and 12. He was a co-opted member of Direct Taxes Committee of SIRC of ICAI for the year 2016 and 17. He is a guest faculty of CA IPCC Orientation and General Management and Communication Skill classes for the Visakhapatnam and Kakinada branches of SIRC of ICAI. He is a speaker at various study circle meetings and he has given various seminars on bank audits, finance bill, income tax conducted by the branches of ICAI, that is Cuttack, Rajahmundry, Kakinada and Visakhapatnam. He is a visiting faculty for MBA students of Geetham University. He is a regular contributor of articles to the Visakhapatnam branch newsletter on various aspects. He has been elected as member to the management committee of IBP Century Club for the year 2011, as editor for the Centurion for the year 2011 and 12. He was a member of Rotary Club Visakhapatnam during the year 2012 and 13. With these few words, I am privileged to introduce the dynamic past chairman of Visakhapatnam branch, CA M.V.Sarma garu, to the today's webinar.
Thank you, CS Revanthi. Now I request the resource person, CS Sharma garu, to take up the further proceedings.
Thank you, Sravanthi garu, for your crisp and excellent introduction of me to the delegates.
Thank you, sir.
Respected Chairman of Visakhapatnam branch of SARs of ICI, CA S. Murali Krishna, Secretary of branch, CA Prashant, and other members in the committee, senior members, past chairman, and other members who are present in this virtual webinar for this last day, that is sixth day of SHASTOTSAV, direct access refreshing week-long webinar, which was commenced on 23rd August and today the grand finale. In fact, as our chairman said, when he thought of conceiving this program for 6 days, it was never happened in Visakhapatnam. Normally, BCAS and CTC, they used to conduct these type of programs at Mumbai and Bangalore. But here, this is the first time in the history of Visakhapatnam branch of SIRs of ICI for continuously having 6 days on a particular subject, that is a direct access, right from interpretation and understanding of the taxes to faceless assessments. In fact, we have one apprehension whether members will participate or not. However, the apprehensions really taken out by a majority of the members, even senior members, juniors, all participated in all these 5 days, including today. Everyone with an enthusiasm or zeal to learn, and the 6 days program, the credit goes to the members of Visakhapatnam branch who made this a success. I think chairman has given a challenge to the coming committees, whether to 6 days or 8 days or 10 days. Let us see. Right. And one more aspect is, this is a SHASTOTSAV. Incidentally, today is a Shashti Tidhi. So he started with Pajami, and Tidhi today is Shashti in Telugu. So the 6 days coincidentally met the same vibration also. So thank you for giving me this opportunity to share whatever little I know, Chairman, and I'll move to the topic. Further, whatever I am deliberating today, it is a purely my personal understanding and my opinion. In no way it is connected to the text what I read or the intentions of the authors who wrote those books or ICA. And anything is subject to correction. I request senior members or juniors, whoever it is, knowledgeable persons, wherever they don't agree or disagree with me, they can squarely update me, and I also learn from them. This is the way of learning. After all, these meetings are conducted for CPE, continued professional education. So with this, I start the subject given to me the presumptive taxation provisions under Income Tax Act under 44 AD, ADA and AE. Let us go to a small brief on this. Why the presumption basis is introduced? The very basic thing, normally in India, not only in India, globally, whoever does the business, they have to maintain regularly books of accounts and get them audited and file the returns accordingly to make the statutory compliance. But small taxpayers, it is very tedious for them to maintain books of accounts, even for engaging an accountant and paying monthly. Just for a small one, it is very difficult for them to pay or meet those expenses, and the compliance of getting our accounts audited and all also a cost bearing for them. Keeping all these issues and further, there are several countries, the method of estimating income for assessment for certain categories of businesses is prevailing. Keeping those things, the central government constituted one tax reforms committee headed by Dr. Raja J. Challaya, and he recommended that introduction of estimated income method definitely will give a boost in tax compliance by small taxpayers. Keeping those things into view, the government, the first time, of course, it's not the first time. In fact, 1988, 44 CA was there. Subsequently, during 1993, the section was repealed anyway. But during 1994, the central government introduced, with effect from assessment year 1994-95, the presumptive taxation under general 3 sections, but as on date there are 2 sections. We'll talk about those 2 sections only. One is 44 AD and another is 44 AE. This is originally, this 44 AD was estimating income from the business of civil construction or supply of labor for civil construction work. And section 44 AE provided for method of estimating income of applying, hiring or leasing of trucks owned by a taxpayer not more than 10 trucks. Of course, this 44 AE is not applicable to the person who takes on hire and operate those trucks. It is the ownership is the crux of 44 AE. And because of the first time they introduced this presumptive provisions and estimating of income on the basis of turnover or gross receipts or on the basis of number of trucks, they issued one memorandum explaining the provisions in the Finance Act 1994. That is by way of a circular number 684 dated 10th June 1994. In that, while dealing with 40B, that is allowability of remuneration and interest to partners in case of firm under section 40B, because this originally the allowance not provided either in 44 AD or in 44 AE at the time of introduction in 1994 Act. But subsequently, by way of a clarificatory and explaining the provisions, they said that 31.3 and 32.2 of the circular, in the case of firms, the normal deductions to the extent allowed under clause B of section 40 will be allowed. So then all the SSCs of firms started claiming this 40B after arriving the presumptive percentage of profit. That means that if it is 8% on 1 crore, if it is 8 lakhs, depending on the 40B, they reduce the remuneration and the interest according to the partnership deed, and the balance they used to pay tax on that, maybe less than 8 lakhs or something. If it is 8% on 1 crore means 8 lakhs minus 40B allowable deduction, and less than 8 lakhs definitely will be the taxable income. However, after a gap of 19 to 20 months, the CBDT issued another circular number 737 dated 23rd February 1996. In that, they stated that the 31.3 and 32.2 of circular number 684 was erroneous and the clarification is not correct, and thereby they deleted the 31.3 and 32.2 paragraphs by way of another circular, that is 737 dated 23rd February 1996. They mentioned under para number 4 in that 737 circular that clause B of section 40 lays down restriction on the deduction allowable on account of salary and interest to the partners, and is not an enabling section for claiming deduction. So on, so on. They given a clarification, and at the end of that para, and removal of doubts from paras 31.3 and 32.2 of circular number 684 dated 10th June 1994. This circular came after 20 months. Meantime, because it is applicable from assessment year 94-95. By the time the clarification came, several firms filed their returns, and assessing officers to disability of the SSCs went for appeal, and there is so much of controversy or litigation because of this new circular. However, during 97 Finance Act, the government inserted a proviso to subsection 2 in 44 AD and subsection 3 of 44 AE with retrospective effect from April 1st, 1994. Late to rest because they said it is a retrospective effect. So 737 circular nullified. 684 still prevailing. Later, 44 AD, then on coming 97 to 2009 deletions. Then Finance number 2 Act means it is not on the Finance Act delivered in the month of February. From assessment year 2011-12, restriction introduced applicability of this section to eligible SSC and for eligible business. A small thing here we have to see there. Earlier, there was another section 44AF where the retail trader can opt for 44AF, and a certain percentage they have given 5% on that, and that was omitted or taken out from the operation that was clubbed into 44 AD in Finance number 2 Act 2009 and the definitions of SSC and business were changed, and to the extent of eligible SSC carrying on eligible business they introduced. Thereby, these two definitions, eligible SSC and eligible business, were introduced. And then on 2017-18, what was introduced in 97 with retrospective effect of 40B, then removed or omitted, effective from 2017-18. Second proviso to subsection 2 of section 44 AD has been omitted, which provided for deduction under section 40B. However, the proviso to subsection 3 of 44 AE still remained. That was not omitted. Thereby, 44 AE still firms can claim 40B deduction, whereas 44 AD is not eligible to claim any deduction by way of remuneration or interest under section 40B by a firm paid to their partners. Now, during 2016, a new section also introduced, keeping in mind of the professionals. Earlier, all the presumptive tax provisions were introduced for small business people, and there is a new section introduced in 2016 Act, what by way of section 44 ADA, a similar scheme almost subject to a few changes, a presumptive taxation commencing from assessment year 2017-18. So this is the brief history of how the presumptive tax has come into force. Now we have three presumptive provisions, deeming provisions: 44, 44 BB, BBB and BBA, like shipping companies, mineral oil exploration, air carriage business. These are all for non-residents, and we are studying today the provisions relating to Indian scenario, residents and Indian residents. That is, primarily there are three sections in this. One is section 44 AD, that is for eligible SSC, eligible business, and 44 ADA for professionals, 44 AE for plying or hiring of carriage goods. Apart from reading these three, each section is having a connection with allied provisions of 44 AA, that is maintenance of books of accounts by specified or notified professionals or business or other professionals, and section 44 AB tax audit, and section 40A 40
Sharma garu voice
application of
సార్ వాయిస్ రావడం లేదు.
వాయిస్ రావట్లేదు. శర్మ గారు బ్రేక్ వస్తుంది. అక్కడ నెట్వర్క్ బ్యాండ్ విడ్త్ ఎలా ఉంది? మీకు ఏమైనా డిస్ప్లే వస్తుందంటే అన్స్టేబుల్ నెట్వర్క్ అని అట్లా ఏమైనా? శర్మ గారు
హలో,
బ్రేక్ ఇన్ ఆడియో.
అక్కడ ఆడియో బ్రేక్ వస్తుందండి. అక్కడక్కడ కట్ అవుతుంది. అంటే నెట్వర్క్ స్టేబుల్ గా లేదేమో.
లేదు ఇప్పుడు రావట్లేదా ఇప్పుడు?
ఇప్పుడు బాగుంది, ఇప్పుడు బాగుంది. మధ్యలో ఇందాకలా 1-2 సార్లు అట్లా వచ్చింది మధ్యలో.
5-6 సార్లు.
అదే 5-6 టైమ్స్ వచ్చింది. అదే అంటే ఇంకా వేరే వాళ్ళు ఎవరు అక్కడ కనెక్ట్ అయి ఉన్నారా? అంటే మన
ఎవరు లేరు, వెనకాల వాణి కనెక్ట్ అయ్యింది.
అంటే రెండే ఉంచండి. ఎక్కువ
నేను
ఉంటే
వాణి
కూడా
అంతే,
అంతే
నేను
అంతే.
వాణి
ఓకే.
ఇద్దరే ఉన్నాం.
అదే అక్కడ రికార్డింగ్ కోసం. ఓకే సార్, కంటిన్యూ ప్లీజ్.
అండ్
మళ్ళీ షేర్ స్క్రీన్ పెట్టండి సార్, షేర్ స్క్రీన్.
షేర్ స్క్రీన్, షేర్ బాబు ఎక్కడ ఇది? షేర్ స్క్రీన్ చూడు, ఇదేనా షేర్ అంటే? కాదు,
బాటమ్ లో ఉంది కదా షేర్ స్క్రీన్, యారో ఉంది.
కిందకి మినిమైజ్ చేస్తాం చేసి, ఇదా? ఓకే, ఇదా? ఓకే. సార్ ఇజ్ ఇట్ ఓకే?
యా, అది కొద్దిగా ఎక్స్ప్లెయిన్ చేయండి సార్, ఎక్స్ప్లెయిన్ చేయండి వీళ్ళైతే.
ఓకే,
ఓకే అండి, ఓకే.
okay. Now, apart from studying this primary provisions of 44 AD, ADA and AE, we have to study, because interconnection is there with each section of these allied provisions. 44 AA, 44 AB, tax audit. 44 AA is maintenance of books of accounts, and 40 small a, 40 capital A, 43B, disallowances in certain circumstances. 68 and 69 series in the sense cash credits in the books of accounts. 69 A, B, C are related to this investments, gold, bullion, jewelry, which are not disclosed or disclosed, not fully disclosed. These are the certain provisions. And TDS provisions, whether TDS is liable to deduct by the business people who are opting for 44 AD, ADA and AE, and advance tax liability and penalty provisions. These are the certain connected provisions we have to study while we are studying 44 AD, ADA, AE. Now, let us start with section 44 AD. Section 44 AD is having 6 subsections. As you are all aware, the subsection starts with capital and ends with full stop. Unlike a clause starts with small letter and ends with semicolon, because clause is by itself is having a full clarity of a particular issue, whereas subsection cannot give the entire meaning unless you study the entire all subsections of that particular section. Now, out of 6 sections, our main thrust is on subsection 1, subsection 4 and subsection 5. These 3 sections are most important to understand while complying or advising the client to adopt or opting of 44 AD. Now, subsection of 44 AD, subsection 1 starts with like this, with a non-obstante clause, notwithstanding anything to the contrary contained in section 28 to 43C, in the case of an eligible SSC engaged in an eligible business, a sum equal to 8% of the total turnover or gross receipts of the SSC in the previous year on account of such business, or as the case may be, a sum higher than the aforesaid sum claimed to have been earned by the eligible SSC shall be deemed to be the profits and gains of such business chargeable to tax under the profits and gains of business or profession. I highlighted some of the terms in this subsection to understand and to have a clarity which is having a bearing on our arriving the income, right? Now, this 8%, before going to discuss the terms, there is a provision to section 44 AD which speaks about this digital payments. If the SSC receives, instead of 8%, only 6% will be the deemed profit on such turnover or gross receipts. Normally, earlier it was 8% irrespective of whether they receive by bank channels or by cash. There is no distinction between bank channels or by way of cash. But now, recently, the proviso introduced with an objective of to encourage digital payments. So a leverage that a 2% concession rate provided by the act, if the business person receives by way of banking channels other than by way of cash, then 6% is enough on the total turnover to arrive his profit. Now, what are the methods of receiving? That is, they mentioned an account pay, check, account pay, bank draft, use of electronic clearing system through a bank, or through such other electronic mode as may be prescribed. Here, exhaustively 3 terms they defined. The other one, they said that electronic mode as may be prescribed. There is a rule 6 ABBA introduced in that the other mode of electronic mode defined by the CBDT. One more thing here, there is another condition also clubbed with this 6%. That is, the amounts should be received during the previous year or before the due date of filing of return of income specified in section 139(1) in respect of that previous year. That means that voluntary return, whatever timelines are there, within that time only he has to receive. Under various circumstances, whether 6% or 8%, we will see in coming slides. Now, the circular rule 6 ABBA issued in that the other modes of here, other modes of as may be prescribed are credit card, debit card, net banking, IMPS, UPI, RTGS, NEFT, BHIM, right? So these are the various methods. Even if the SSC receives the proceeds through this electronic modes, 6% will be charged, offered on those amounts. Now, this slide shows there are 2 conditions. One is amounts should be received other than by way of cash, and the second one is on or before the due date of filing under 139(1). Now, cash sales during financial year received 8%. Then account payee checks or ECS in bank account during financial year 6%. These 2 are clear-cut cases. One is cash sale, another is account payee checks or ECS, whatever it is, on electronic mode. This is 8%, that is 6%. Now, the credit sales received in bank before 139(1) date. So he has not, suppose he has not, the SSA has not filed his return of income on or before 139(1). So 6% he can offer while filing the return of income. Received in cash before 139(1) date, 8%. Received in bank after 139(1) date, anyway, because the proviso says on or before 139(1) date, so it is 8%. Received in cash after 139(1) date, that is also 8%. Here, there are 2 things. One is whether credit sale or cash sale, first you need to establish. Then, if the SSC, though the due date is September 30th, let us suppose for this year, September 30th is the due date for filing of return under section 44 AD SSCs. However, he filed on August 31st of this month, this year itself, let us suppose, and he received in between after filing the return and within the due date, stipulated date, if he receives by way of banking channel, whether that amount can be taken as a 6% category or not. Once the return is filed and even subsequently the amount received by way of banking channel, 8% should be adopted, no 6%, because the provision clearly stated that that amount should be received on or before filing the return within the 139 one date voluntary return. So this is provision 244 AD 1. Next, I highlighted some of the terms in 44 AD 1. Let us see what is eligible business, who are eligible SSC, and the meaning of turnover or gross receipts, and what is the significance of word gross receipts, what are the amounts to be clubbed and what are the amounts allowable not to be clubbed, and what is the meaning of claim to have been earned. Eligible SSCs, subsection 6 defines and explanation gives the provisions of subsection 1 to 5 applicability, and they defined two terms. Explanation A specifies about who are the eligible SSCs. Explanation B specifies what is the eligible business. Both the definitions are exhaustive definitions, means it starts with eligible SSC means. So this section will not apply to any other person other than those mentioned in the section. There they said almost individual resident, Hindu undivided family resident, partnership firm resident. It is not applicable to LLP. Only 3 eligible SSCs they mentioned, that is resident individual, resident HUF, resident partnership firm. You may have a doubt, in a partnership firm, one of the partner is non-resident. Whether can it be treated as resident partnership firm? No, because all the partners should be residents only. Then it will be treated as resident partnership firm. Is it right? Hello?
Yes, sir.
Is it correct?
Yeah.
See, I'm telling that.
How can it be so? Because is it the residential status of the partnership firm or the residential status of the individual partners?
Yeah, that is the reason what I am telling.
Partnership
Yes,
firm,
one of the
tax
partners-
resident partnership firm.
Yes.
Is a tax resident of India.
Yes.
Yes, am I right? If I am wrong, I am subject to correction.
You are right. You are right. That is the reason. Just I stopped. It is for the partnership firm should be resident, not the partners. Though one of the partner is non-resident, but the residentship of partnership firm will not alter. So that is the reason. Just whether people are attentively listening or not, just I want to see. Kamsastegar is there. I am so happy today. Now, explanation A says the following are not covered because it said means they mentioned an individual HUF a partnership firm who is a resident and claiming deduction under chapter 3 of the act is not eligible to opt for 44 AD, or that is section 10A, 10AA, 10B, 10BA, that is a free trade zone, hardware, software, technology, so on and so forth. These chapter 3 and resident, they are not eligible to opt for 44 AD. Similarly, those persons who are claiming deductions under section 80 HH to 80 RRB of the individual or HUF, they are also not eligible to opt for the 44 AD. Now, by reading this, the following are not covered, rest all covered. Individual who is not resident, HUF who is not resident, so on and so forth, cooperative society. Anyway, they are not, whether Indian or non-resident, they are not, the companies, both domestic and foreign company, every artificial juridical person, these are all not covered by 44 AD. Simply individual, resident HUF and resident partnership form. These three are the SSCs who can opt for 44 AD. Now, what is the business or profession eligible? That is eligible business they mentioned. Eligible under section 44 AD. Explanation B explained this eligible business. Subsection 6 of section 44 AD states that the provisions of this section, notwithstanding anything contained in the foregoing provisions, shall not apply to a person carrying on profession in subsection 1 of 44 AA, that is specified professional and notified professionals, a person earning income in the nature of commission or a brokerage, a person who is carrying on any agency business. That is, a clarification is given by our institute. They said that in the tax audit guidance note, an insurance agent cannot adopt the presumptive taxation scheme of section 44 AD because it is an agency business. So these three business, other than these three, all businesses are eligible to opt for 44 AD. Explanation B says, any business except the business of plying, hiring or leasing of goods, carriages can referred in section 44 AE and whose total turnover or gross receipts in the previous year does not exceed an amount of 2 crores. Anyway, there are separate provisions prescribed for plying and hiring and leasing of goods carriages in section 44 AE. So that is taken out from 44 AD, and there are two separate provisions provided for different businesses, and the monetary limit fixed for this 2 crores, though the tax audit under section 44 AB, the limit was 1 crore. However, here it is up to 2 crores. They have given the what you call the privilege to the SSC to opt for 2 crores, and he can offer 8% or 6%, whatever it is, and without touching the tax audit, he can file his return of income. So here there are two conditions we need to understand. One is section 44 AA1, that is specified professional and notified professional. Notified professional means authorized representative and film actor. Of course, subsequently company secretary and information technology also, by way of notification, they brought them into the notified professional. So here they are not eligible or not supposed to come under 44 AD. There is a question, one doctor, anyway, I'll complete and we'll go to the examples next. First, we understand the concepts, then we'll move to other things. And the commission or brokerage business and agency business, these three categories of, they say it is one way of, one is the profession, the second one is the commission, third one is the business. So here these three are excluded from 44 AD. They are not supposed to opt for it. And again 44 AE, and the limit is 2 crores. If it exceeds 2 crores, they are not eligible to opt for 44 AD. The business definition is given under section 213 of the Act. It includes any trade, commerce, manufacture, so on and so forth. The reference is Barendra Prasad Rai versus ITO 1981, 129 ITR 295. Supreme Court has given the elaborated details of what is the business and what constitutes. From then, the 213 also defined the business. So eligible business includes, by study of this 213, manufacturing, trading, wholesale, retail, job work, service business, speculative, non-speculative, all these businesses are covered to opt for 44 AD. Only the categories were mentioned in above this explanation and for 6, they are not eligible, rest all eligible. Now, 44 AD 2 and 3, these are all not much of complicated. These are all simple provisions. 44 AD 2 says, any deduction allowable under the provisions of sections 30 to 38 shall, for the purposes of subsection 1, be deemed to have been already given full effect, and no further deduction under those sections shall be allowed. So whatever deductions you want to claim under section 30 to 38, including your depreciation, everything is covered in this. However, specifically they mentioned under section 44 AD3 how to arrive the written down value. Though they said that the depreciation is already covered under 44 AD2, 30 to 38 already given full effect to allowed, and but a specific provision provided under section 44 AD3 stating that the written down value of any asset of an eligible business shall be deemed to have been calculated as if the eligible SSC had claimed and had been actually allowed the deduction in respect of the depreciation for each of the relevant assessment years. Though you purchased 4 years back, you have been opting 44 AD, your return down value should be every year of these 4 years, the applicable rate of depreciation should be claimed and deducted from the value of the asset, and what is the today's value should be arrived. That means 44 AD3. Now, the most complicated and litigation section is 44 AD4. In this, the wording slowly we need to understand with the help of some of the examples, where an eligible SSC declares profit for any previous year. Just remember, in accordance with the provisions of this section, and he declares profit for any of the 5 assessment years relevant to the previous year, succeeding such previous year, not in accordance with the provisions of subsection 1, he shall not be eligible to claim the benefit of the provisions of this section for 5 assessment years subsequent to the assessment year relevant to the previous year, in which the profit has not been declared in accordance with the provisions of subsection 1. This is looking like you have to see first the previous year. I'll give you some of the examples in the later slides. The important point in 44 AD4 says, once you opt for 44 AD, you need to continue for 5 years subsequently and offer 8% or more, right? Now, 44 AD5, it says applicability of 44 AA 2(4). If you find this maintenance of books of accounts prescribed under section 44 AA 2, in clause 4, they mentioned that where any SSC under section 44 AD not offered income according to that section, and they have to maintain books of accounts and get audited as per the act and furnish the report, those things they mentioned there. So here 44 AD5, what if I don't follow 44 AD1? thereby attracting 44AD4, then what it is? Notwithstanding anything contained in the foregoing provisions of this section, an eligible SSC to whom the provisions of subsection 4 are applicable. So he deviated continuous of following 5 years and offered less than 8% or 6%, whatever it is. And in his case, his total income exceeds the maximum amount which is not chargeable to income tax. He crossed this threshold limit of 2.5 lakhs. One is 44AD4 is attracted, thereby the income also exceeding 2.5 lakhs, that is a threshold limit. Any one condition is not touched in this, not complied, then 44AD5 will not come into the picture. If these two cumulatively satisfied, then he shall be required to keep and maintain such books of account and other documents as required under section 44AA2 and the audited and furnish a report of that required under section 44AB. So here these two conditions should be satisfied to attract, to maintain books of accounts and tax audit provisions. Now, section 44AD says, once you opt for section 44AD1, then you have to continue for 5 years. If not, if you violate any of the conditions in 44AD1, that is 8% or 6% or less than the prescribed percentage of income stipulated, then you have to go for 44AD5. The following are the situations where this 44AD4 is not violated and 44AD5 will not be attracted. Let us see. Business is some instances where net profit is lower than 6% or 8%, but 44AD4 may not be applicable. Let us see. Business is newly started during the year, or the SSC is a new SSC. So the first condition is not satisfied. What it is? Declared profit in any previous year. The wording there, they said that declared profit in any previous year mentioned in the 44AD4. So he has not declared any profit in any of the previous year. This is the first year of his business. So 44AD4 violation is not there. The second situation, the SSC or business has become eligible for section 44AD during the year. That is, same is in point 1, but first time opted after underwent tax audits. He has underwent tax audits for 4 years or for 5 years. This is the first time he came for 44AD. He also not declared profit in any of the previous year. So he can opt for 44AD. Third situation, the SSC has completed the continuous period of 6 years and left 44AD. That is, he opted 44AD and continuously another 5 years also he followed this 44AD. Thereby, he completed 6 years of 44AD and he came out. It is the option to him whether to go for 44AD again or he can go for less than 6% or 8%. And the next year also, this provision is not applicable. Continuously, once he completed the block of 5 years succeeding of previous year, then he is a free bird. The other situation, the provisions of 44AD4 applicable, but the 5 years completed, contravened and came out. First time 44AD, he came out and first one, case number 3 is successfully completed 6 years. But the case number 4, he contravened less than 6 years he started. Thereby, 44AD is not at all applicable for 5 years ban. So he completed the ban and all those 5 years he filed his return other than 44AD and now he is again can start opting for 4480. The ban is over. And the last one is the eligible SSC of eligible business had not adopted presumptive basis for the assessment year 16-17 till date, because there are various reasons. Eligible SSC presumptive tax has not offered, always is going on with other provisions like 44AB, or his income may be less, or nil return he is filing, like that. So these are the 5 instances where 4484 is not violated, or he can start as per 4480 again, or he can go for other sections, tax audit or whatever it is. Now, there are, this is one through example, we will see this. This amendment came in effective from 2017-18 onwards. Now, 2017-18, his sales were more than 2 crores. And 18-19 also more than 2 crores. So, 19-20, he offered below 8%. 2021 also he offered below 8%. He started offering 4480 from 21-22. Here the point is, earlier from 17-18 to 2021, he never opted 4480. There is no violation. So the first time he opted 21-22 assessment year, then he has to go for till 26-27 assessment year. That 5 years period he has to complete under 4480. This restriction only applies from the first assessment year that the SSC files under 4480. So if the SSC did not file 4480 prior to assessment year 21-22, he can file under section 4480 in the above instance. 1. The SSC files 4480 for 5 years after the first assessment year, so there is no violation. SSC can file below 8% for assessment year 27-28 or succeeding years. There is no ban on this. This will not violate the restriction. This is case 1. The second case, 17-18 more than 2 crores, anyway not eligible to come for 4480. Assessment year 18-19 below 8%, so far has not opted 4480. 19-20 he opted 4480 and continued 4 years only. In the 5th year 24-25 he filed his return by offering below 8% of deemed income. So once he violates there, all these 4 years of effort has gone. Now he cannot opt for 4480 for another 5 years, that is 25, 26, 27, 27, 28, 28, 29 till 30, 31. He cannot file under 4480. Further, he has to maintain books of accounts and such other documents for the assessment year 25-26 and get it audited. So it is very dangerous unless you complete the 5 years stretch once you opt 4480. The case 3. If considering of earlier assessment years, see the amendment has come from assessment year 17-18 onwards, prospectively, of course. The subsection speaks of SSC filing under section 4480 for any previous year. Therefore, does this amendment apply for previous years before the section came into being? That is 16, 17, 15, 16, like that. If you go on counting from 13, 14, 12, 13, like that, whether those years also to be taken into consideration while calculating this 5 years, or only prospectively they should be calculated. So normally in general parlance, it is came into effect from assessment year 17-18. So normally we follow prospectively, not with retrospectively. This point could prove litigious if the department takes that stand, although here one SSC did like this. Assessment year 15-16, he opted 44 AD. Then on 5 years he counted till 2021, that is 16, 17, 17, 18, 18, 19, 19, 20, 20, 21. All these 5 assessment years, he opted 44 AD and he started offering his income below 8% in assessment year 21-22, taking the earlier 2 years also into account. Though the amendment came in 17-18, they have not mentioned anything. So he has taken that advantage of earlier 2 assessment years of 15-16 and 16-17 also. However, if the department says this amendment came in 17-18, so this should be applied prospectively, not retrospectively, then the SSC will be in problem. So let us not venture these type of experiments to put the SSC in trouble. Let us take from calculation of assessment years 17-18 onwards. Category 4. If not considering of earlier years, in a normal, the subsection speaks of SSC filing under section 44 AD for any previous year. Therefore, does this amendment apply for the previous years before this section came into being? This point could prove so and so. If the continuing of 6 years starts prospectively, it will start from 17-18 onwards. The SSC would be under 5 years ban. That is, though the 13-14 onwards has been following the 44 AD, those should not be counted. The 17-18 will be the starting point for counting of this 5 years and completing of 6 years to come out of this 44 AD to opt according to his option. Now, I think I am clear in this. Now, eligible SSC means so and so. Sales is 2 crores. Still an eligible SSC, but the business is not eligible business. Once, see the wording, they mentioned that one SSC came to me, asked me, sir, by virtue of my sales increased from 1.9 crores to 2.4 crores, whether any violation of 44 AD 4 was there. Because they said that once I have been following 44 AD for the past 2 years, and that is 1920 and 2021, another 4 years I have to follow, because the 1920 assessment year was the first year of my option, and once I opted for 44 AD in any assessment year, I have to follow another 5 years succeeding that previous year. So I have to follow another 5 years or till assessment year 24-25. However, after assessment year 2021 also, my sales were less than 2 crores. Then I opted for 44 AD. In assessment year 21-22, my sales were shoot up more than 2 crores. Whether anyway, the act says once your sales crosses 2 crores, you are not an eligible business. Maybe you are eligible SSC, being a resident individual. However, your business is not eligible to opt for 44 AD as per explanation B of 44 AD 6, right? In this case, he went for tax audit and filed his return. The next year, 22-23 assessment year, again his sales fell down to 1.5 crores. Whether 44 AD violation is there, can he continue this as a second year of his 5 years ban, 5 years continuity or not? Act says eligible SSC carrying on eligible business. where by virtue of increase in sales has become the business is ineligible, that is not a violation of 44 AD4. So he can happily opt for 22, 23, 44 AD and continue for another 3 years. There is no such violation, right? Now, here, notwithstanding anything to contrary contained in section 28 to 43C means, here the 44 AD1 starts with the non-obstante clause having to contrary that word. Though subsequently, the 44 ADA also introduced with it from 2017-18. However, this coining of to contrary, that word is not there in that non-obstante clause. It simply said, notwithstanding anything contained in section 28 to 43C only. Then, why this to contrary is introduced means, it says section 28 to 43C is not applicable. However, because of 40B is allowed as a deduction, though the non-obstante clause says, irrespective of whatever is having in sections from 28 to 43C, don't consider whatever I am telling, because it is a code by itself. It is defined, and the method of computation, everything is provided in the section 44 AD itself, without considering the method of computation contained in section 29 of business or provisions, right? So it is to be noted here that the non-obstante clause stresses on the term contrary. A similar non-obstante clause is not having this word of contrary in 44 ADA, because 40B deduction allowed earlier. Of course, subsequently that was removed, but still the contrary is still appearing in 44 AD. Now, the following are the advantages for small business people going for 44 AD. That is, the amounts not deductible under section 40A. Expenses or payments not deductible in certain circumstances. That is, payments made in cash exceeding 10,000 or 40 capital A3 or 40 capital A3A. Even the liability or expenditure incurred in the previous year, if the amounts are paid in current year exceeding 10,000 by way of cash, they are also not included or added to the no disallowance on such payments. 41, no deemed income to be taxed. 43B, there are certain deductions to be only on actual payment. There is certain case laws I will refer. There is a small clarity is required. Now, this is over. This is also I completed. And no separate depreciation is required. 44 AD3 over. Now, regarding this issue of disallowance under section 43B, in Goa, that is a Panaji Tribunal, Good Luck Kindtech versus ITO, in ITO number 26 by PNJ 2013, assessment year 2006-7, it said that the tribunal held in the erstwhile 44 AF case, notwithstanding anything to the contrary contained in section 28 to 43C, whereas section 43B starts with the words notwithstanding anything contained in any other provisions of this act. So the non-obstante clause in section 43B has far wider amplitude, because 43B states that on actual payment of provident fund, cess or interest to the banks, all these things are not in a common expenditure, unlike without making any TDS, if you claim 40A, all these salaries without deducting TDS, these are all not such a type of dissolvences prescribed under provisions of section 43B. So they said that notwithstanding anything contained in any other provisions of this act, it supersedes even 44 AD also. So the control placed by the provisions of section 43B of the act in respect of the statutory liabilities still holds precedence over such elements. This is the observation by Panaji Tribunal. So they said that this is because the dues to the crown, that is government, has no limitation and has precedence over all other allowances and invoking the provisions of section 43B. So should be very careful, because though we are filing under section 44 AD, don't feel that we are comfortable, there are no books of accounts, all this. Anyway, once it is selected for even for a limited scrutiny and subsequently they convert for regular scrutiny, they call for all these details. There you have to show the bills, vouchers, even challans, paid challans of PF, PSA, all these things. So document that is what they provided under section 44 AA, even rule 6F, what they said that even a reasonable documents or other connected books of accounts to assess the income by the assessing officer. You have to produce at least some sort of documents before the assessing officer. Unless you show something, how can he arrive the profit or income, whatever you have shown in the return of income? So here you should be very careful regarding the section 43B. Though the case law is while referring the section 44 AF, but it squarely applies to 44 AD as well as 44 ADA and AE also, because all these are all on the same nest. Now, total turnover, gross receipts. As you know, the terms not defined by the act anywhere. However, our guidance note on financial statements issued by ICAI, the expression sales turnover, item number 15.01, has been defined. Significance of word gross receipts. The total turnover is the amount receivable from clients in respect of sales of previous year. These are all, by going through this, you can understand the issues involved in this. We will discuss to save time. Method of accounting applicable to section 44 AD, because 145(1) says the word sales or turnover with reference to, they should be understood. Provisions of section 145(1), which provide that income chargeable under the head profits and gains of business or profession or income from other sources should be computed in accordance with either cash or mercantile system of accounting regularly employed by the SSC. And as such, the method of accounting followed by the SSC is also relevant for the determination of sales, turnover or gross receipts, because the section 44 AD is in the block of income from profits and gains of business or profession, and section 145(1) prescribes these two heads of income should follow method of accounting. So 44 AD also have the method of accounting to be followed. Now, there are two methods of maintaining the accounts. One is inclusive method of taxes and another is exclusive method. See, we go a little further, and these are all certain items which are to be added to the or included in the turnover, like sale of scrap shown though miscellaneous income, but it should be a form part of turnover. Sale of unusable empties and packages, service charges charged for delivery in connection with the delivery, and there are certain discounts which are on the face of sales invoice that should be reduced, because in the sales invoice itself it is showing cash discount. Other than that, should not be deducted. And the turnover discount normally by way of credit note issued, this is also on par with sale invoice discount only, hence it should be reduced from the turnover. These are all a price of goods returned, this should be reduced. And the following are not to be included in the turnover, that is sale of property, plant and equipment, advance received from customers, deposits received or retention money. You just you remember this, retention money should not be included as turnover as per our institute set. Now, any security, we will discuss about this retention money in a later stage. Any security, retention or other deposit obtained from employees, interest income or other similar receipts, this value of inventory. Now, those are all in a regular practice. What is the turnover? What are the inclusions? What are the exclusions? Now, we will see is distinct and separate circumstances where we need to determine the turnover, like derivatives, shares, MCS operations, those things, excuse me. We need to understand the term turnover in the context of these type of businesses. Derivatives trading, whether 44 AD applicable. This explanation B says only 44 AE commission and agency business are not covered by 44 AD. However, trading in commodity or stock derivatives has not mentioned there, so they are eligible for 44 AD option. However, what is the turnover? This is the crux of this. Now, what the section 43.5 and explanation by our institute in the guidance note on tax audit, the speculation transactions defined under section 43.5, and in the guidance note on tax audit, our ICI has given how to determine the turnover, the aggregate of the net result of each contract. Normally speculative transaction in the sense, Monday the stock exchange will be open and every Friday will be settlement day, and they will buy and square up without taking physical delivery. That is called a speculative transaction. Any scrip purchased in any notified stock exchange without taking physical delivery, that will be treated as speculative transaction. So here, then it will daily I purchase 2 crores or 3 crores worth of shares, and at the end of the day I sell all those, even for 5 rupees or 10 rupees or 1000 margin, I sell them. So my turnover will be every day 2 crores, right? Whether the entire 2 crores coming to hundreds of crores for the year will be treated as turnover? No. What they said, the aggregate of the net result of each contract, either positive or negative, first you should arrive this, and then you total it, irrespective of its whether negative or positive, the difference between these two, purchase, sale, every day, the net effect, how much you settled, that is more important. I show you one example here. Every day trade one, the SSA retail trade 1.5 crores in retail trading. The SSA also informs that she has done equity derivatives trading on National Stock Exchange as below. What are the implications? Here, trade 1, she got profit. Net result is 4 lakhs. Trade 2, she got 2 lakhs. Again, net result 2 lakhs positive. Trade 3, 30,000. Similar, trade 4, if you see, trade 4 and trade 8. These 2 days, she sustained losses. On trade 4, 22 lakhs, she lost. And trade 8, she lost 3 lakhs. So net result, if a positive and negative, if you see, she got benefited by earning 6.3 lakhs only, comprising of all 8 trades. However, that will not be considered for turnover purpose under 44 AD. What they consider, though the trade 4 and trade 8 showing a negative figure or loss, that will not be applicable here. The entire net result, whether it is positive or negative, that should be added. That is, the entire amount of 8 trades, including 56.30 lakhs is turnover, and 1.5 lakhs plus 56.30 lakhs put together, he crosses 2 crores. Thereby, he is not eligible to opt for 44 AD, has to go for tax audit. Similarly, another example here, in this, the net effect is a net loss in case 1, trade 1, trade 2, left hand side example. And the final turnover is 2.4 crores. So here the turnover is 2.4 crores, though it is a net loss of entire amount of 10 lakhs, but turnover should be taken as the net of negative or positive. That is, trade effect is to be taken. 2.4 crores should be the turnover. In the second example, though he earned 29 lakhs, but his turnover is 1.85 crores only. Here, he earned more than sustaining losses. Under 3 circumstances only, the 3 trades periods, he incurred losses, whereas the rest 5 times he gained more. Especially on trade 7, he earned 90 lakhs. Here the point is, his turnover is 1.85 crores. How much he has to, whether he is eligible to opt for 44 AD? Yes, because eligible SSC, eligible business, because of under 2 crores only. And whether, then we have to think whether this 29 crores of profit, net of loss and profit, to be offered as income or 8% on this. It is advisable to offer 29 lakhs because it clearly showing trade to trade what is the net effect. Tomorrow, if you file for by offering 8% or something, you will be in trouble. So better we offer whatever the net effect of profit, taking a 1.85 crores as a turnover, not 8%, because in the section itself, the amount deemed to have been earned, that not only 8%, higher amount also we can offer under section 44 AD 1. Yeah. Even if you want to consider these facts, your 26 AS will show all these transactions, and department definitely will know the total transactions you have done with the stock exchanges. So here, this is a speculative transactions, case loss and all I have given. The same with the derivatives transactions also. The same analogy can be applied, and share broker and okay. Now, there is one circular in deciding whether sale of shares in trading comes under business income or capital gain. The next issue is speculative. Anyway, we have seen without taking physical delivery, if they settle on a trade to trade basis, the net effect will be taken as a turnover and offer the tax. That is regarding the speculative derivatives, which is not taking physical delivery. Whereas if you take physical delivery and sell them subsequently, then whether the income arising out of that sale of shares from time to time will be business income or capital gain. Then a clarification given under circular number 6/2016 dated 29th February 2016 stating that to mitigate the litigation and maintain consistency in approach, the issue of treatment of income derived from transfer of shares and securities they have given, stating that if the shares are shown under investment, then the net result will be under capital gain. If the regular practice of the business itself is buying and selling and or the frequency of dealing with the share trading depends, then it will not be treated as capital gain income. It will be treated as business income. So it depends on case to case. There is no set of rules, prescribed set of rules to determine a particular situation. This will be business income, or except shares are shown under investment. If they sell them, that will be capital gain attracted. Now, this consignment agency business, because Kacha Arhatyas and Pakka Arhatyas, there is one circular number 452 dated 17th March 19. What is the date? 17th March 1986. They said that whether the sales by a commission agent or by a person on consignment basis form part of the turnover of the commission agent or consignee, as the case may be. Sale of Goods Act, when we study, the litmus test is that whether the property in the goods are all significant risks and reward of ownership of goods belong to the commission agent or the consignee immediately before the transfer by him to third party or not. This you have to verify. That is, significant risks. Even we are writing in the notes to the accounts, revenue recognition, these words, significant risks, reward of ownership of goods, we are realizing those things. Similar tests should be applied. If the risks and rewards of ownership of goods belong to the commission agent is not in his name, then that will not be treated as his turnover. Only commission amount only should be considered. If the commission exceeds 2 crores, he is liable for tax audit. Or if he is a commission below the threshold limit of 2 crores, then he can opt for 44 AD. Whereas if he raises a bill, yeah, yes, right. Here, hello.
Sir.
Audible.
Voice is audible.
Yes, sir.
So when also okay. The property in the goods are all significant rewards of ownership continue to belong to the principal, then the sale price shall not form part of the sales of the commission agent, the consignee, as the case may be. In such case, only commission will be accounted for in his case, and 44 AD is not applicable in his case because it's not an eligible business, specific exclusion of commission business. However, the property in the goods, significant risks and rewards of ownership belongs to the commission agent or the consignee, as the case may be. That is, he raises invoice he purchases and he raises invoice and delivers to the goods to the third party, then the entire amount will be treated as his turnover. Here, same clarification here. In commission earned from advertising agency, whether the entire amount will be treated as turnover? No, because advertising agency means they collect advertisements and hand over to the concerned newspapers or magazines, and for that they get some commission. The commission amount only will be treated as his income, and he is not have any option to come for 44 AD because it is a commission business. Similarly, insurance agency business also similar to that. However, there is a small distinction between general agency and gas agency, because gas agency, the agreement clearly indicated that the appellant was appointed as a distributor on principal to principal basis for sale of gas cylinders to consumers. Consequently, the sale of gas cylinders was liable to be included on the turnover of the appellant. Though it is an agency, but the invoice will be raised by the distributor in the name of the third party. Once cylinders came to the godown of the distributor, and the responsibility then on the risk and reward, everything will be on the head of the distributor. So here, this is an eligible business for 44 AB. 44 AD. Now, these are all some of the case laws I mentioned. Turnover for a chit fund. I share this presentation and so that you can go through that. A chit fund is subscribers is on a capital account, so those amounts should not be considered as turnover. And income of a nursing home, whether professional or business income, I have given certain slides here. See, there is a distinction between profession and business. I'll deal with when 44 ADA we discuss. Now, gross receipts. What is the meaning of gross receipts? Similarly, turnover not defined, even gross receipts also not defined. This is various amounts which has to be treated as gross receipts, that is cash assistance by whatever name called, received or receivable by any person against exports under any scheme of the government, any duty of or the aggregate of gross income by way of interest received by the money lender, commission, brokerage service. These are all examples of gross receipts. Reimbursement of expenses incurred, that is the packing, forwarding, freight, insurance, traveling, etc. And if the same is credited to a separate account in the books, only the net surplus on this account should be added to the turnover for the purpose section 44 AD as well as for the 44 AD also equally applicable. So these are all various circumstances under which we have to treat these amounts as gross receipts. Now, the issue is whether GST shall be included while calculating the gross turnover or receipt. There are two schools of thought. That is, section 145A says inclusion of taxes, cess, etc. in the value of sale, purchase and inventory while arriving the valuation for the purpose of income tax. They said inclusion of taxes, cess, etc. in the value of sale, purchase and inventory. Whereas if you take like that, one SSC is following composition scheme under GST now, and he is not separately charging or not separately showing in the balance sheet output tax and input tax separately, and he is debiting the net amount as a P&L account debit. So here inclusive method cannot be obtained because he is not collecting anything and not availing any input tax credit. On the other hand, GST is charged from the customer and is recognized separately in the books. We are maintaining it is a balance sheet item, exclusive method, which is prescribed by our institute also. Though the income tax says inclusive method, but our institute suggested exclusive method. So whether the GST should be taken or not, in my view, GST should not be considered while arriving the gross turnover or gross receipts. Exclusive method only we have to follow. However, while arriving the valuation for the purpose of income tax, this should be considered and any difference should be quantified and make a note of it. If something goes wrong tomorrow and called by the department and why you have not included this specifically mentioned in 145A of inclusion, why you have not taken. So to arrive this amount also on one hand working and you see the difference. The second school of thought is, after all, there is no impact of this on the profit or loss. The SSC is acting as an agent on behalf of the government. He is collecting and paying to the government. So that will not have any impact on his turnover. That is one kind of argument. So not to get any litigation, my view, better we don't consider GST in the gross receipts or total turnover. If you consider GST, there may be some problem. The problem is like this. If the turnover of the SSC is 1.9 crores with a GST rate of 18%, and if it is applied 18% and inclusive method, his turnover should be 2.242 crores. Then he is not eligible to opt for 44 AD. He has to go for tax audit. And one more thing here, the 8% or 6% also not on 1.9 crores. Even if you were even 1.7 crores, if we take, let us suppose, even if his total turnover or gross receipts below 2 crores, inclusive of GST, then whether to apply for 8% or 6% will depend on the GST portion also. If he pays the entire GST in cash and the sale proceeds are in by way of banking channel, there is a problem again in deciding 8%, 6% also. So unless a clarity from the government defining gross receipt or gross turnover, the problem still persists, right? Now, okay. Whether, Chairman,
Sir,
can I take 5 minutes?
yes, sir. Yes, sir. Yeah. Please. You are continuously in deliberation, so I didn't disturb you. But yeah, you please, sir. You can give a break for 5 minutes.
Just 5 minutes enough.
Yeah. Okay, sir. Okay.
Thank you. 3 hours. కొద్దిగా.
Members, let us have a pause, break for 3-4 minutes, because this is 3-hour session. Continuously speaking is difficult for the speakers as well as for the delegates to listen continuously for 3 hours. So just let us take a small break for 5 minutes. The speaker will join again. So whatever the queries or questions you have, you can put it in the chat box, or you can unmute yourself and ask directly to the speaker at the end of the session. Dear members, we are organizing one physical seminar on 30th Monday as a trial basis to know the interests or views of the members, whether to continue the webinars or to go for some of the seminars in a physical manner or so. On a trial basis, we are just organizing on 30th Monday. I request all of you to join for this. It is from 5 to 8 evening time, followed by dinner. The topic is attest functions by CS, care and caution. The speaker is our CAD Prasanna Kumar Garu, our ex officio member and Central Council member. I request all of you to join for this physical seminar on Monday, 30th of August. I request speaker to take up the further proceedings, sir.
Thank you, Chairman. Now, does ICDS apply to non-corporate taxpayers who are not required to maintain books of accounts, maintain books of accounts, or those who are covered by presumptive scheme of taxation like 44AD, AE, ADA, 44B, BB, all other sections. And now, normally we feel that ICDS is applicable to in case of only tax audit, and we are doing that. That too, individuals and HGFs who are not covered by tax audit also, and those who are following the cash basis, they are also not liable to comply the ICDS standards. Now the question is, ICDS apply to non-corporate taxpayers who opt for presumptive tax under 44AD, ADA, AE. Now, there is one clarification by way of a circular number 10/2017 dated March 23rd, 2017 regarding the applicability of ICDS on determination of turnover by non-corporate taxpayers covered under presumptive taxation like 44AD, AE, so on and so forth. In this regard, in response to question number 3 on the topic, it has been clarified that ICDS shall also apply to persons computing income under presumptive taxation schemes. For example, a firm, partnership firm, doing business of construction contracts. In such case, first let us go the notification circular, what they said. ICDS is applicable to specified persons having income chargeable under the head profits and gains of business or profession or income from other sources. Therefore, the relevant provisions of ICDS shall also apply to the persons computing income under the relevant presumptive taxation scheme. For example, for computing presumptive income of a partnership firm under section 44 AD of the Act, the provisions of ICDS on construction contract or revenue recognition shall apply for determining the receipts or turnover as the case may be. So here, what they said that the fixation of turnover here 44 ADA, we know the fixed percentage is income 8%, or if it is a digital mode 6%, we know that, but the variable is the amount of turnover. So it is having an impact on the turnover, thereby the profit tend to change. Now, for instance, where a taxpayer covered within the ambit of section 44 AD, a construction business, which requires a determination of turnover as per percentage of completion method, POCM, both under accounts and ICDS. However, under ICDS 3, retention money is included in contract revenue, while under AS 7, this may not be the case. Earlier I said when the issue of retention money should not be included in the turnover. However, there is a deviation here. When you are following this ICDS, the retention money should be included in the turnover, whereas AS7, it is other way around. So here, why I am telling, these are the issues normally we don't take into account. Simply, we are following 8% or 6% or tax audit, those things only we are considering. Here, the 43B disallowance and ICDS applicability, these are also should be studied on especially this construction contract, wherever any deviation is there, revenue recognition or this turnover determination in these areas, these also should be considered. Now, the such business means here the wording there, they mentioned that the total turnover or gross receipts of the SSC in the previous year on account of such business means that total turnover, aggregate of turnover. See, these sections, presumptive sections are on the qua SSC, not on the basis of business and all. One person can have any number of businesses. However, putting all put together of this turnover should be considered while determining the total turnover or gross receipts. That is the crux of that. Now, who will prove the total turnover or the gross receipts? It is the onus of proof is on the SSC. That is the reason we have to maintain some sort of books of accounts or documents or bank accounts, invoices, bills, vouchers, all these things. Though they mentioned that there is no need of maintaining books of accounts and going through the accounts and all, it's not correct to some extent, because whenever the problem comes, these are the things will help you in maintaining books of accounts and keeping all the relevant documents, invoices, bills and vouchers. Now, these are the documents better to keep always: copies of invoices issued during the previous year, cash memos, purchase bills, bank statements, inventory details, if any maintained, under the GST regime, one has to maintain the books of accounts. These are the provisions long back they framed in 1994, and then on they are making some amendments and deletions, additions, all these things. Here, unless you maintain the proper inventory details, how can you say that your purchases and your sales, even when you are filing return, they are calling for the cash balance, your debtors, your creditors, your inventory. How can you arrive those four figures without maintaining proper, at least some sort of books of accounts? So better we'll maintain some books of accounts to, and also the said documents for to avoid future complications. Now, total meaning of total income for the purpose of section 44 AD 5. 44 AD 5 in the sense where tax audit 44 AB applicability we studied, where any violation or deviation from 44 AD 1, then 44 AD 4 attracts. And there are two conditions there they mentioned. One is violation of 44 AD 1, and the income, the total income should exceed the threshold limit, 2.5 lakhs, whatever. Then what is the meaning of total income? Total income in the sense, section 245 states, total income means the total amount of income referred to in section 5 computed in the manner laid down in the act. There are certain case laws I have mentioned. So putting all sources put together, not from business, not from interest, except exempted incomes, then all 5 heads of income put together, if it crosses the threshold limit, the total income means the method of computation laid in section 5, right? So for the purpose of section 44 AD 5, the total income would be determined as under. Income from all heads of income be aggregated after adjusting for brought forward losses, unabsorbed depreciation, etc., and after excluding exempt incomes. From the resultant amount eligible for deduction under chapter 6A will be deducted. Balance will be total income for the purpose of section 44 AD 5. This is a normal calculation. Almost it is a taxable income. Whatever we arrive, the taxable income, nothing but in a parlance of that section 5 states total income. We call them as a taxable income. So this is all provisions will squarely apply, including chapter 6A deductions also will apply. If the total income is below the maximum amount not chargeable to tax in the case of SSC, then the SSC will not be required to maintain what we studied earlier. Now, maintenance of books of accounts. I just a single slide, I tell this, if time permits, I have prepared one 70 slides presentation I will share with the members. Then all the issues involved in maintenance of books of accounts dealt in that presentation. Chairman, I will share with you. Just
Yeah, okay, sir. We will circulate to members. Yeah. Okay, thank you.
now, every person 44 AA1 speaks about specified professional and notified professional. So here we are discussing about 44 AD business persons. Hence, the 44 AA1 is no relevance here. Then 44 AA2 speaks about every person carrying on business or profession not being a profession referred to in subsection 1. There, what they said, if is the total income from business or a profession exceeds 1.2 lakhs, or here there are, I tell you, there are 2 tests here to be applied. First, you see that whether there is 2 provisions also there. Here, what they said, income from business or profession other than 44AA1 professional, if the income exceeds 1.2 lakhs, income, mind it, and the turnover exceeds 10 lakhs in any of the 3 years, that is another condition. Immediately preceding the previous year, if it is the same monetary conditions, if it is newly set up in any previous year, the SSC during such previous year. So these monetary conditions, if it is exceeding previous 3 years of that previous year, if it already in existence of business, or in the previous year itself, if it is newly set up business, then he has to maintain books of accounts and other documents as prescribed by rules. And there are 2 provisions included in this. If there 44AA2 starts with every person. However, the provision says if that every person is an individual or HUF, then the 1.2 lakhs is 2.5 lakhs and this 10 lakhs is 25 lakhs. This amendment came from 1/4/2018 onwards. That means that if any individual deriving income from business or profession, if his income exceeds 2.5 lakhs or his gross receipts exceeds 25 lakhs in any one of the 3 years immediately preceding the previous year, or if he is newly set up in any previous year, 2.5 lakhs of his income, 25 lakhs of his turnover likely to exceed, then he has to maintain books of accounts as prescribed. This is regarding maintenance of books of accounts, monetary limits prescribed under section 44AA subsection 2. Now, applicability of tax audit, I already discussed with this. Any of violation of that, if it is exceeding 2 crores, anyway, tax audit. If it is below 2 crores and not offering the income as per the rates prescribed under 44AD1, then he has to go for a tax audit, provided his income exceeds the threshold limit. 1. SSC wants to, this is already covered. Turnover less than 1 crore and profit offered less than 8% and total income is 2.6 lakhs. Section 44AB provides for tax audit of business. SSCs having turnover more than 1 crore, but section 44AD provides for compulsory tax audit for those business SSCs claiming a profit less than 8% of total turnover. So, his turnover is 1 crore. He is offering a profit less than 8%. However, his total income is 2.6 lakhs. Then whether 44 ABE applicable, that is 44 AD violation, 44 AD4 or 44 AA24 applicable or not. Here, this means even if the turnover is less than 1 crore and the SSC claims profit less than 8%, he has to comply with the maintenance of books of accounts and the tax audit provisions provided total income is greater than threshold exempt limit. So, he has to maintain books of accounts and get audit. Now, these are all 2 cumulative conditions what with examples I said it. Brokerage business. Brokerage anyway, it is not covered by 44 AD, irrespective of the percentage of income, whether 1 crore or 2 crores or 3 crores, whatever it may be, his turnover and his income percentage of offering, no way concerned with 44 AD. Then they have to go for section 44 AB once the threshold limit exceeds. Then summary of 44 AD, 44 AA and 44 AB. If greater than 8% of turnover, if income is offered, then it exceeds basic exemption limit also, but 44 AA and 44 AB not applicable, and section 44 AD is applicable. Equal to 8% of the turnover, if it is offered as income from eligible business, the same conditions. There is no tax audit, no maintenance of books of accounts. 44 AD is applicable. If less than 8% of the turnover, but exceeds basic exemption limit, 44 AD will not be applicable. 44 AA and 44 AB applicable. If less than 8% of the turnover and less than exemption limit is total income, there is no 44 AD, no 44 AA, no 44 AB. This is a summary of section 44 AD. Here I have taken certain screenshots of written what are the provisions specified under 44 AA1 and code prescribed in the written. Business brokerage 44 AD, 44 ADA, 44 AE. Under all these three, it is not applicable. So here provision in the sense 44 AA2 other than 44 AA1, advertising, auctioneers, market research, labor recruitment, investigation, packaging activity. These are all covered by 44 AD. They are not provisions under 44 ADA, right? This is the same thing. Healthcare services. Here, these are all 44 AA1, dental practice, Ayurveda practice, Unani. These are all codes. 18 code is for ADA. And this is for profession, again, 40 accounting profession, tax consultancy, fashion design, photography, all these are 44 AD covered, culture and sports. Independent blood banks, healthcare services, you can see here, independent blood banks, medical transcription, independent ambulance services, these are all covered by 44 AD. They are not 44 ADA professionals. And medical clinics, however, will be treated as 44 ADA. So this is screenshots of written I have taken for clarity of identifying a particular business, whether it is a business or a profession. Now, after completing all this, what are the certain allied sections which are connected to presumptive taxation? They are section 68 to 69C. Let us go through them. Section 68, unexpected cash credit in the books of accounts. 69, unexplained investments not recorded in the books of account. 69A, unexplained money, bullion, jewelry, valuables, articles not recorded in the books. 69B, same thing. And 69 plus 69A, not recorded fully. 69C, unexplained expenditure. These are Pancha Pandavas will having effect on 44 AD, 44 ADA and 44 AE. How these will work out? Where any sum is found created in the books of an SSC. One SSC, what he has done, he maintained books of accounts, though 44 AD specifically mentioned there is no need of books of account. However, during the assessment proceedings, he has shown the books of accounts and he has not given a satisfactory explanation for the cash credit found in the books of accounts. Though each entry in the bank account need not be explained, that is in a different context, because bank statements cannot be treated as books of accounts. That is a document. It is not maintained by the SSC. Bank statement never be treated as books of accounts maintained by the SSC. Here, books of an SSC maintained. In this, there are no books of accounts. If there are credits in the bank account of the SSC, which are not shown as part of the gross receipts, whether they can be taken into account. The simple rule is like this. If the SSC maintains books of accounts, any amount created and it is not properly explained or explained not to the satisfaction of the assessing officer, then such amounts will be included in the income over and above the 8% or higher amount offered by the SSC. In Mayavati case, if you see, there are bank statements and several amounts found in the bank statement. And the assessing officer wants to tax all those credits in the bank statement. Then Delhi High Court said, bank statements are not books of accounts as per IT Act. Therefore, a cash credit appearing in SSC's passbook relevant to a particular previous year does not maintain books of accounts can be treated and does not attract the provisions of section 68. If he maintains books of accounts and found by the assessing officer during the search or survey or during the assessment proceedings, then it is allowed to included in the income. So then 69. Income tax officer versus Devi Singh Solanki, 99 TTJ JP 89 890 IT80 Jaipur. What they said here, the 44 AD is a contractor, and some of the investments during the assessment proceedings found by the assessing officer, and he wants to add those amounts under section 69, whereas the SSC on appeal, it was held by the Jaipur IT80 that it is, however, seen that CIT appeals has examined the source of purchase of the assets, reduction of liability in great detail, and has found that the same has been duly explained by the SSC in as much as the same were mostly made by account payee checks and drafts. The department has not placed any material on record to rebut the set findings of the learned CIT appeals. We therefore uphold the order passed by the CIT appeals, deleting the addition made by the assessing officer, because this fellow has not maintained books of accounts. He is following 44 AD. Based on the bank statements, the assessing officer wants to add certain amounts. He said, I purchased all my properties by way of checks only through bank. However, the assessing officer not satisfied with that explanation, he wants to add that. CIT appeals deleted, and again department went for appeal, and the tribunal said that CIT is correct in holding that, and they also deleted that. Now, these are all 69A case laws, and this is a summary of 69, 69A, B, C with reference to 44 AD. I have given some of the case laws, leisurely you can go through them. Anyway, I'm just sharing this. And other thing is section 72, carry forward and set off of business losses. The 44 AD supersedes sections 28 to 43C only. It is not superseding chapter 3, that which under section 72, though the current year depreciation, the SSC cannot claim, or he cannot avail any other expenses or any of the including 40B. However, section 72, that is carry forward of business losses in earlier years and in subsequent years he can claim against the income arrived at. So setup of brought forward business losses only eligible to set up against the 44 AD income. If he is not having any other income, that means the total income. And in second case, where the SSE is not maintaining a separate set of books for his two businesses. Let us say he is having two businesses and doing the business in the same premises with the same staff. However, he is maintaining separate books for each, but common expenditure like rent, electricity bill, staff expenditure, all this. Then how to identify the expenditure common to both the businesses? Then it is said that a reasonable expenditure should be apportioned between the businesses depending on the quantum of turnover or certain other issues, right? The only condition under set up and brought forward is current year losses and the brought forward losses can be set up anyway, but current year and brought forward depreciation cannot be set up against the deemed income, since that is governed by section 32, which is superseded by 4481, right? So this is a small distinction between carry forward and brought forward business losses to be set up and carry forward of and current year depreciation cannot be set up because the sections are different, and one section is superseded by 4481, another section is not covered by non-obstante clause. Certain times we can the threat of this 133(6) without your fault. Sometimes your SSE is purchasing some goods or selling some goods or having some business transactions. The other fellow was searched or some other transactions during the assessment proceedings or something. The SSE is served with a summons under section 133(6) for furnishing of the statement of account of that other person reflecting in the business transactions of his books. Now, the question is where the SSE is following 44 AD or 44 AD or 44 A and without maintaining any books of accounts, how he can give the business transactions in his books of accounts when called by the department? So at least you need to maintain some sort of books, and you can state that, sir, I have been opting 8% under section 44 AD presumptive taxation, thereby I am not maintaining any books of accounts and all, but still you need to satisfy or you need to show the genuineness and creditworthiness of any loan or deposit given to the other person if it is called by the department, right? Now, this already I mentioned Surendra Pal Anand is long back old case, and it is everybody knows that SSE is not under any obligation to explain individual entry of cash deposit in bank unless such entry has no nexus with gross receipts. So based on the assessing officer called for every credit reflecting in the bank statement, in some of the amounts he said received from wife, received from others, like that. There is no nexus of his turnover or gross receipts, but still the assessing officer insisted and added. On appeal, the final Punjab and Haryana High Court said that there is no such necessity or no obligation by the SSE to explain each and every entry in the bank book. And now this survey. These are all cases TDS. The earlier 2002, the earlier that was the deduction of TDS by the individuals and HUF were not there right from introduction of this presumptive tax during 1994. However, during 2002, a provision is inserted under section 194C, 194H, 194I, and all these sections, stating that 194J, stating that if, anyway, not to confuse that, if the individual or a HUF under obligation to tax audit, then in the subsequent year, they have to deduct TDS and comply the chapter 17 provisions insofar as the items are concerned. However, the Finance Act 2020 amended all the above sections, taken out that provision inserted in 2002 in 194A, 194C, 194H, 194I, and 194J, and amended to that a provision is inserted. The provision says, provided that an individual or a Hindu underweighted family whose total sales, gross receipts, or turnover from the business or profession carried on by him exceed the 1 crore rupees in case of business or 50 lakhs rupees in case of profession. That means that if is a business 1 crore, if it is profession specified 44 ADA, then up to 50 lakhs anyway, there is no problem. Up to 1 crore, there will not be any problem. Not for the current year. You have to see what is the turnover of the previous year. Depending on that previous year's turnover, you have to comply the TDS provisions in the current year. It is very, very important, right? Individual, for example, I tell you, individual or HUF carrying on business and whose total sales, gross receipts or turnover exceeds 1 crore but does not exceed 2 crore in the preceding financial year and opted for section 44 AD of the Act are now liable to deduct tax at source under section 194A. For that matter, even 192 also, if he pays more than 8.5 lakhs or something. So 194C, 194H, 194I, and 194J with effect from 1/4/2020. Very dangerous. Normally, we don't see this is the area. Once any SSC is having between 1 crore to 2 crores of turnover and opting this 44 AD in the last year, and you should see in the current year, you have to make TDS. This is only for individual and HUF. Anyway, for firms and all, anyway, you have to make TDS. There is no such provision or exemption in that. And similarly, the individual or HUF engaged in plying, hiring, or leasing of goods carriages and whose total sales, gross receipts, or turnover exceeds 1 crore in a preceding financial year and opted for section 44 AE, liable to make a TDS. Because you may have a doubt, sir, if it is exceeding 1 crore, whether they are liable for tax audit. No, because it is not on the basis of turnover they mentioned. The section is on the basis of income. So 1 crore, you can also ask me, sir, 10 vehicles is the maximum and each vehicle is having 7,500 per month or a part of month. And every vehicle, if it continuously owned for the entire year, put together only 9 lakhs, it will come 90,000, isn't it? Every month, 90,000 into 10. So 9 lakhs and into 90 lakhs. Then how can it cross 1 crore? Because he is having all vehicles of higher ton, unladen, heavy vehicles, not the small 7,500. Each ton of 1,000 rupees vehicles, then automatically this will cross 1 crore. So there, if it crosses, then he has to comply the TDS provisions prescribed under 194A. Of course, I have not mentioned 192. It is clearly applies even section 192 also, provided the amount of salary at that level. Right now, these partnership LLP, anyway, they have to make TDS without considering this turnover of the previous year. Right. So again, the deduction under chapter 6A is allowed because the same analogy, notwithstanding anything, only up to 43C, there is no bar on claiming deductions in respect of incomes. Of course, other than 80HH to 80TT, because here the deductions they mentioned here, that you need to consider. Chapter 6A deductions. Chapter 6C speaks about incomes. So we are not touching section chapter 6C. We are touching upon chapter 6A, 80C, 80D, whatever it is, the list of sections. Now, payment of advance tax. Section 211(1)B and prescribes in the month of March on or before 15, the entire tax liability in one installment, the advance tax has to be paid. There is one clarification also there. Even if the amount paid on or before 31st March will be considered as the advance tax paid in the last installment. If it is not paid, 234C will be applied for 3 months. And this is how the 44AD, by seeing this 44AD, hardly we have 6 subsections in this, 1 proviso and 2 explanations. But once you go on discussing the issues, lot of even I limited to certain extent of certain issues. Otherwise, even at least 2 days it takes to cover presumptive taxation, presuming it is not presumptive taxation. Right. Next, I quickly go through this 44ADA. Chairman, shall I go? Shall I continue?
Yes, sir. Yeah. Yes, sir. Yes.
Okay. Now, so far we completed 44AD. Now, coming to the 44ADA, 2017-18 onwards, this came into picture. It is having same lines of 44AD, not to deal, not much. Only thing is, contrary is missing in 44ADA1. 44ADA2 and 44ADA3 are similar. 44ADA4 is also similar. Consequences, of course, with one exception, there is no such stipulation that once you have opted 44ADA, you need not maintain, you need not opt for another consecutive 5 years. That condition is not there in 44ADA. In 1 year, you can go for a tax audit. In the next year, you can opt for 44ADA. Again, you can come for tax audit. Like that, on and off is possible under section 44ADA. There is no such stipulation. Once you have opted for 44ADA, you have to continue for another 5 years succeeding that previous year in which you have opted for 44ADA. So one more thing is, earlier in 44AD, already they have excluded the LLP. Inadvertently, while doing this 44ADA, they have forgotten to take out of this LLP. In recently, they amended the act and they have taken out, other than LLP, only individual, a partnership form, other than LLP, even HUF is also not there. There are only two statuses where you can opt for 44 ADA, right? And there, any SSC they mentioned, and a resident here, who is a resident in India. This is a specific wording they mentioned in who is a resident in India mentioned in 44 ADA. The same word is not coined in 44 AD. Now, this is all only issue is the gross receipts should be less than or equal to 50%, and he should be a professional covered by 44 AA1, and the income presumptive rate of income on the turnover or gross receipts should be 50%. These three are the conditions. One is eligible SSC, we know resident individual, resident firm, eligible profession 44 AA1 specified 7 categories and notified 4 categories, and a monetary limit less than or equal to 50 lakhs, and the amount of presumptive tax is 50% of such gross receipts. And these are all I detailed what are there in the 44 AA, legal, medical, engineering. See, I have given the code and the 44 AA in the earlier slides. If you go through them, the same thing you can mark in the written. So here, originally, there are 6 professions defined under 44 AA. What is legal, medical, engineering, architectural profession, the profession of accountancy or technical consultancy or interior decoration. And lastly, they said that any other profession as is notified by the board in the official gazette. They mentioned under Rule 6F, by way of a notification, the authorized representative and a film artist. Again, the film artist they defined in a notification dated 12/1/1977. These only notified under this any other profession as is notified at that time. That is the reason if you read the Rule 6F, these two only mentioned along with the specified professional, means specified professionals plus 2 notified professionals. The other notified professionals, company secretary and information technology, subsequently by way of notification introduced, but the corresponding amendment in Rule 6F was not made. Hence, some of the conditions laid in 6F are not applicable to company secretary as well as information technology professional. That is, maintenance of books of accounts they prescribed under Rule 6F, read with rule section, read with section 44 AA1. So there they mentioned the specified professional and authorized representative and film artist has to maintain the following set of books of accounts, or exception by way of a proviso mentioned in Rule 6F, stating that if any of the above professional, the income, gross receipts, income in the sense, the gross receipts not exceeding 1.5 lakhs, then they need not maintain books of accounts. There, authorized representative and film artist only mentioned notified professional. The company secretary and information technology professionals not included. That means that these 2 professionals should maintain books of accounts irrespective of their receipt. Even for 1 rupee receipt also, they have to maintain books of accounts because there is no corresponding amendment made or inclusion in the rule 6F while dealing with section 44AA1. Now, these are all eligible business, financial consultancy. These are all you can understand normally also. There is not much to deliberate on this. Again, 44 ADA 4. This is important, like 44 AD 4. Notwithstanding anything contained in the foregoing provisions, so and so, if lower than the profits and gains specified under subsection 1, whose total income exceeds the maximum amount, we discussed. So any violation of 44 ADA 1, and if his income is exceeding maximum amount which is not chargeable to income tax, so he is required to keep maintenance of books of accounts under section 44 AA 1 and get audit and furnish a report of such audit as required under section 44 AB. Here, even otherwise also, see, maintenance of books of accounts we are confusing with, because he said that 44 AA 44 ADA 1, if you violate like this, even otherwise 44 AA 1 prescribed that you have to maintain books of accounts unless your income is not exceeded, your gross receipts not exceeded 1.5 lakhs. If it is exceeding, you have to maintain books of accounts. The small point I want to highlight here, in section 44 AA 2, subsection 2, there are 4 clauses are there. First one is rule 6F, 44 AA. 44 AA, maintenance of books of accounts. There are 44 AA 2, there are 4 clauses. One is for the business. Second one is profession. Third one is 44 AD violation. And fourth one is 44 ADA 1 violation. There, whether, hello?
Yes, sir. Audible, sir.
Audible, huh? Okay.
Yeah.
If you see 44 AA 2, one finest observation I tell you, we are discussing about we need not maintain books of accounts once we opt for 44 AD or 44 AE. There is no need of maintain books of accounts and all these things we are discussing, right? Only 44 AA1 specified professionals only has to maintain books of accounts, and rest all, even professionals also other than covered by 44 AA1 professionals, there is no need of maintenance of books of accounts, all these things, because rule 6F states only or prescribes only books of accounts and other documents are place where it which to be stored or the number of years to be maintained. All these things prescribed only for 44 AA 1 professionals. Rule 6F 1 or 2, 6F 2 defines, even 6F 3 in case of doctors, what are the other than 642 defines. These are all says referring only 44 AA 1 professional only, and there is no mention about 44 AA 2 prescribed books of accounts. A reasonable arriving the income of the SSC only to be maintained. Just simply they said and they left it, right? There are no specified books of accounts like cash book, ledger, journal, documents of bills, all these things not mentioned anywhere in Rule 6F with reference to other than professionals of 44 AA1. And if you see 44 AA1, in how we arrived that 44 AD if we adopt or 44 AE once we opt, there is no need of maintenance of books of accounts and all. Where from we got is under section 44 AA 2, that is other than 44 AA1 professionals and business people. Clause 3 states that where the profits and gains from the business are deemed to be 44 AE, 44 BB, 44 BBB, that is non-residents running here, mineral exploration and turnkey projects here, if they are here and not offered 44 BB and 44 BBB, both are 10% they have to offer on the gross receipts. If they don't offer, they are covered by maintenance of books of accounts and audit, all those things came. Here, 44 AA subsection 2 speaks about clause 3, 44 AE, if he is not offering income as per 44 AE1, then he has to maintain books of accounts and get the audit provided his income exceeds those things, everything provided under 44 AA 2 clause 3. That is the reason what we are under the impression that once we are complying 44 AE 1, then there is no need of maintenance of books of accounts. Similar provision for 44 AD also provided under 44 AA subsection 2 clause 4, that where the provisions of subsection 4 of 44 AD are applicable in his case and his income exceeds the maximum amount which is not chargeable to tax in any previous year, he shall keep and maintain such books of accounts so and so, so and so. Compute his total income in accordance with the provisions of the Act. So all provisions will spell. However, they are corresponding the same section for 44 ADA, you don't find in section 44 AA subsection 2. There is no such clause, unlike 44 AD 4 and 44 AE 4. You don't find the same clause where if it is less than 44 ADA is opted by 44 ADA professional, you have to maintain books of accounts according to the, those things not there in that. That means that whether you reduce your presumptive income offering of 50% or lower, you are bound by maintaining books of accounts. That is advisable. Even the monetary gross receipts mentioned in 44 AA by way of a proviso under Rule 6F1 also mentioned that 1,50,000 a meager amount, right? Now, I already covered this, is only a resident in India, though AD specifically does not state in India, it is mentioned only resident. Continuity for 5 years is not applicable to 44 ADA. Similarly, concession of 6% for banking channels also not available 44 ADA. This I already covered here. What 6F1 says, this proviso says, maintenance of books of accounts. Subsection 44 AA 3 and 4 specifically mentioned for 44 AE and 44 AD only. There is no such mention of 44 ADA in 44 AA 2. Now, similarly, we can claim Chapter 6A deductions and payment of advance tax, same online with 44 AD and issues. This is, you can go through the case law, I complete because it's already 7:40. The only thing is, any partner, if he receives remuneration or interest from the firm, exceeds the threshold limit of 1 crore, he is liable for tax audit. Where it was held that a partner would be liable to tax audit under section 44 AB if his salary from the partnership firm exceeds the threshold limit prescribed under section 44 AB. And India Magnum Fund. This is also whether share income from the partnership firm to be included under 44 ADA. They said section 10 2A exempts the share from partnership firm, and the exempted incomes are not forming part of total income. Hence, the share income from the firm by the partner should not be included in the gross receipts while arriving this threshold limit of 50 lakhs. 44 AE, simply because it is nothing but on the same lines, only change is it is not on the basis of turnover, it is on the basis of number of vehicles owned by the person who is opting this. It is it should not be on the basis of taking hire and running them and offering. It's no. He should own. There are certain issues. In a nutshell, I'll tell you. One is, in ordinary goods carriage, which is defined by the what you call Motor Vehicle Act. What is a goods vehicle and what is a heavy goods vehicle? They define. And goods vehicle 7,500 per month or a part of month should be treated as income, irrespective of even higher amount also he can offer. Even that is also provided in the goods carriage owned by him in previous year. And heavy vehicle 1,000 rupees 1,000 per ton. So if it is a 12-ton vehicle, 12,000 per month or part of month, irrespective of it is run for 2 days or 30 days, it doesn't matter. And even owning and not running also doesn't matter. Once you have 10 vehicles, 5 condemned, but you are not sold, still under your name, then you can opt for 44 AE. Whether they run or not, we have to offer on the consolidated basis. Piecemeal is not allowed, because you say 5 vehicles are not running, sir. They are defunct and they are in the shed. No. Once you have in your ownership on the book, you have to offer all put together of vehicles. No piecemeal is allowed. And all other sections are same. The only difference between 44 AD and 44 ADA and 44 AE is still here the 40B is still available from the income. That is the biggest advantage for AE assessing. So, and one more aspect is, if his income exceeds 1 crore, he is not liable for tax audit, because income already based on vehicle basis, already fixed that income on the basis of a particular vehicle. There is no question of claiming any expenditure or something. So there is no such a stipulation that even if it is 1 crore, the gross turnover is crossed according to section 44 AB will not be applicable, right? So goods carriage and this already covered. Motor Vehicle Act and meaning of words, a clarification given by CBDT. These are all certain analysis of section 44 AE and various circumstances, whether to see form versus act, owned, hired or leased. Even hiring in the sense hire purchase, even if you purchase on hire purchase or lease purchase, leasing, and still there are certain EMIs pending even after first EMI once you pay and registered in your name, though the lien on the vehicle still will be held in the name of the financer, but the ownership lies with you and you can offer this amount. And my guru is here, U Ramakrishna Garu, and telling me that sometimes he is also helping me in anything if I am forgetting. He says this offering of 7,500 and 1,000 should be only the vehicle should be on hire. If it is run for himself or for his own business, it should not claim it as that income. There is no such income tax officer calls you and you are having 10 vehicles and I am treating 7,500 per month. Your total income will be like this. No. If it is hired, even if it is hired for one day, then fine. If it is not hired at all during the month and exclusively used for his own business, such income should not be included in the hands of the SSC. Here, renting of machinery, transport and logistics services, these are the codes, and whether it is a 44 AD or 44 AE, both the things can be possible provided you are running on them or high or you are treating them as business. So 44 AE, these are all case laws I mentioned. And these are all okay. 43B, same. Good luck kinetic. And common issues, same thing. Applicability of TDS and all. Thank you, Chairman. And thank you all delegates for your patient listening of almost 2 hours 50 minutes. Chairman?
Yes, sir.
Thank you so much. I finished my presentation.
Thanks a lot for your elaborate presentation, sir, with so many slides and coverage, extensive coverage on the topic.
And in fact, I prepared one more on maintenance of books of accounts and all also.
Yes, you told, yeah.
Okay.
సార్ శర్మ గారు
Sir,
నాకు ఓ డౌట్ ఉంది సార్.
చెప్పండి సార్.
మీరు సర్టెన్ ప్లేసెస్ లో 1.5 lakhs అంటున్నారు బుక్స్ ఆఫ్ మెయింటెనెన్స్, సర్టెన్ ప్లేసెస్ లో 2.5 lakhs అంటున్నారు.
అవునండి.
సో
చెప్పనా?
ప్లీజ్
ఒక్కసారి చాట్ బాక్స్ లో ఏమున్నాయో చూస్తున్నాను.
చూడండి, పోలే తర్వాత చెప్పండి. అది నాకు అదొకటే నాకు బాగా
one question, sir. For about 2 crore, no presumptive taxation, please. Is one this thing.
For about 2 crores, yes, there is no presumptive taxation. SSC is at his own option. Any percentage he can offer to the department, right? Because 44 AD specifically mentioned the threshold limit of 2 crores. You cannot assume or cross that 2 crores. Honestly speaking, 44 AB says 1 crore only. By way of a clarification or subsequently amending this, the department said, the government said, even up to 2 crores, we are allowing you, provided if you offer 8%. That is a privilege given to the 1 crore to 2 crore business people. Right? And regarding this Vasudevamurthy Garu's question, can I say or?
Okay, sir. I will take
Yes,
it.
sir. Yes, yes.
I don't think 10 minutes is enough, but I have one presentation I'll share with you. I tell you, 44 AA1 there are maintenance of books of accounts dealt by section 44 AA, right? And there are 4 sections: 44 AA1, 44 AA2, 44 AA3, 44 AA4. And 44 AA1 is exclusively dealing with specified professional mentioned there, and at the end they said the certain professionals will be notified from time to time. In that they notified, let us not have any confusion, we will take specified professionals, right? Notified we will see later. Specified professionals. 2 says other than 44 AA1 professionals and other business people, right? There it is having 44 AA2 having 4 clauses, 1, 2, 3, 4. Under which circumstances you have to maintain books of accounts, where you are a business person or a professional other than 44 AA1, specified professional, right? 3, what are the what is the place you have to keep these books? And 4, and how many years you have to maintain? These are the mainly 2 sections are most important: 44 AA1 and 44 AA2.
2.
Right? 44 AA subsection 2. There 44 AA1 they said the following professional has to maintain books of accounts as specified as per the prescribed by the CBDT. Prescribed books of accounts prescribed by the CBDT from time to time. Then they framed rule 6F. In the rule 6F, again rule 6F1, 6F2, 6F3, 6F4, 6F5. Now 6F1 says the professional of whatever category mentioned in 44 AA1, again a replica, they mentioned all the specified professionals plus notified professionals, means authorized representative and film artist has to maintain books of accounts as mentioned in subsection 2. Right? Subsection 2 says rule 6F1 subsection 2 says whatever said in the rule 6F1, the specified professionals and notified professionals should maintain the following books: cash book, ledger, journal and other documents. And 6F subsection 3 says where the 44 AA1 is a medical professional, you have to maintain, in addition to the subsection 2 books of accounts, the case register, the other things also they mentioned. 6F4, how many where you need to place the books of accounts. If it is one business in the place of doing business, if you are maintaining 2 to 3 places, the particular registered office or separate books are maintaining for separate businesses in the separate registered office, like that they mentioned. The last section 6F5 says 6 years of books you have to maintain, or if it is a 148 reopening till the reopening is completed. This is the structure of rule 6F. By reading rule 6F, you don't find anything speaking about section 44 AA2. There they mentioned that only the reasonable assessing the income by the assessing officer you need to mention. This is how rule 6F prescribed, right? Now, Rule 6F having a provision. It is having a provision. One fellow asked them, sir, I am a chartered accountant. Whether I am liable for maintaining books of accounts as per Rule 6F and 44AA1. Then they said, yes, you have to maintain books of accounts because you are a specified professional under 44AA1 and rules under 6F prescribed books of accounts under Rule 6F2. Sir, is there any exception to this rule? Then they said, if your income, if your gross receipts are not exceeding 1,50,000 during the previous 3 years, if you are in the profession for the last 3 years, or it is the new profession you started during the year, your gross receipts are not exceeding 1,50,000, then there is no need of maintain books of accounts, they said. So 1,50,000 is restriction. There, if you see, there is a confusion in the department, erroneous framing of the 3 years wording mentioned in the provision. What they said, their intention is even for 1 year, your 1,50,000 threshold is exceeded, then you are liable to maintain books of accounts. Whereas they framed the wording that the 1,50,000 should not exceed in any of the year. In any of the previous year, they mentioned like that. In any of the mention means in all the 3 years that should exceed 1,50,000. It takes a little time if I put it on paper.
Okay.
I have one presentation I will send you. So
Okay.
this is the lacuna in framing the word for 3 years under section Rule 6F1. So this is how. Whereas this is 1,50,000 restriction for professionals mentioned in 44AA1. 44AA2, the prescribed books are not there. Nothing is mentioned about you have to maintain these books, you have to maintain like this place of maintenance, number of years, though nothing is given. However, the threshold limit of maintenance of books given. If it is an individual or an HUF, your income for the last 3 years, if it is exceeding 2.5 lakhs or gross receipts of 25 lakhs for the last 3 years of this previous year. If it is a profession carried on or business carried on, or if it is a new one, in the year itself, if it is likely to exceed the turnover of 5 lakhs or your income 2.5 lakhs, you need to maintain books of accounts. For individual and HUF. Someone went there, AOP or firm or someone went there, sir, you prescribed this 2.5 lakhs and 25 lakhs monetary limits for individual and HUF. What about us? We are AOP, we are firm, we are other than individual and HUF. What is our status? Then they said, in your case, the 2.5 lakhs is not applicable. It is only a 1.2 lakhs. If it is exceeding for the past 3 years, then you are liable, or your gross receipts of 10 lakhs. Other than individual and HUF, the monetary limits are 1.2 lakhs and 10 lakhs for the 3 years or current year. If it is individual or HUF, then the monetary limits are 2.5 lakhs and 25 lakhs. This is the.
Okay. Thank you very much, sir. Thank you, sir.
Thank you.
I recognize the presence of CA Prasanna Kumar Garu for today's webinar. Really so happy to see you here, sir. Despite of your busy schedule, You have attended for this seminar, really so nice, sir.
Actually, I was in a national conference that is over. అందుకని ఈ వేషంలో ఉన్నాను. ఈ వేషం దాంట్లో తప్పని శర్మ మాట్లాడుతుంటే కొంచెం ఆన్ చేశాను ఒకసారి. సో 44 ఏఏ తో బ్రహ్మాండం విన్నాను ఇప్పుడు.
శర్మ గారు చిన్న డౌట్ అండి. 44 ఏబి ప్రకారం 1 crore అయితే ట్యాక్స్ చేయించారంటున్నారు. 44 ఏడీలో 2 crores వరకు ఆఫ్టర్నూన్ క్లెయిమ్ తీసుకొచ్చారంట. మనం ఏంటికి ఫాలో అవ్వాలి అంటే 2 crores వాళ్ళేమో 1 crore దాచింది కదా, ఆడిట్ చేయక్కర్లేదా? 44 ఏబి ప్రకారము ట్యాక్స్ రేట్ అవసరం అంటున్నారు. టర్న్ 1 crore దాటితే.
Yes.
44 ఏడి ప్రకారము 2 crores వరకు ఆఫ్టర్నూన్.
Yes, option is given. Option is provided in the section itself. If the SSC opts for 44 AD, then up to 2 crores, he can go for and he can offer 8% and he can simply close it.
అంటే 44 ఏబిని ఇగ్నోర్ చేసినప్పుడు
If he is not willing to do that, if it is below 8%, if he wants to offer, then automatically the 44 AB will apply. Sir,
చెప్పండి.
The problem is the tax audit threshold limit 1 crore prescribed in 44 AB. 1 crore.
అది ఎప్పుడు 1993లో అదే ఉంది సార్.
1 crore. And here in 44 AD, the threshold limit is 2 crores. And again, if you see that 44 AB 1 crore, the threshold limit increased to 5 crores, thereby 10 crores. And they said that if the expenses or revenues, income and expenditure not exceeding 5% in cash, then you are not liable to go for tax audit.
As present situation ప్రకారం.
Yeah, even 5 crores, you see. If it is a 5 crores, but the 1 to 2 crores people are at loss. They cannot go beyond that. Anyway, even 5% are, see, for I tell you one example, Venkateswar garu. I am covered by my eligible business. I am eligible SSC and my business is eligible to claim 44 AD. My turnover is 1.9 crores. All my receipts and payments not exceeding 5% in cash. And because 44 AB says, if it is up to 10 crores, if your income, gross receipts not exceeding 5% of 5%, not exceeding 5% in cash, you are not liable to go for tax audit, right? Whereas 44 AD says up to 2 crores, you have to go for presumptive tax. If not, you have to go for 44 AB, irrespective of your 5% not exceeding cash of your receipts and payments. That is the minus point for the SSCs who are in the bracket of 1 to 2 crores.
ఒక కేసులో 1 crore 95 lakhs turnover,
right?
And he is getting 6 lakhs towards rent. అప్పుడు rental income. అప్పుడు is it necessary to get it audited? Total receipts turnover.
Rental income normally should not be considered in gross receipts unless it is having a business nexus. Even see, one case is there. He is having almost 1.9 crores of his income and 10 lakhs he is having interest from bank FDRs. He wants to offer even on bank FDRs also 8%. 2 crores. CPT said that, no boss, this income should be separately assessed because there is another head. Though you have given FDRs for the purpose of business as EMD or security deposit, whatever it is, the income should be recognized as income from other sources. It should not be clubbed with your gross turnover, thereby claiming 8% is only the income.
8% గురించి కాదు, 80D కాదు, 44AB అవసరమా కాదా?
44AD అవసరం లేదు, నేను అదే చెప్తున్నాను. ఈ రెంట్ కనుక ఇన్ కనెక్షన్ విత్ ది బిజినెస్ అనుకోండి, you have a godown and you are receiving rents and you have business also, both the things put together, your gross receipts crossed 2 crores, then you are liable for tax audit, provided if your all receipts and expenses not exceed 5% by way of cash, then you are at liberty to offer any number of 4% or 5%, 6%, whatever it is. There is no such restriction of 8% or 6% there. The only lacuna is the bracket of 1 to 2 crores people will suffer. Even they have not exceeding 5% in cash, everything is by way of checks. All 2 crores they received by checks. Still,
In case of contractors,
they cannot go beyond 8% or 6%. 6%. They cannot reduce that or 5% or 4%. If they want to do that, they have to go for 44AB audit. That's it. It is only applicable for up to 2 crores. That's it.
thank you, sir.
Okay, thank you.
Members, any more queries? You can unmute yourself and you can ask the speaker.
Sir, M.V.10 అయింది, బాగా నీరసంగా ఉంటుంది, బాధ వదిలిపెట్టి. It's a privilege, sir. After a long time, after 1.5 years, bank audit లో మాట్లాడాం. మళ్ళీ again, I'm happy. Even ఎవరో షష్ఠపూర్తి అన్నారు, షష్ఠపూర్తికి ప్రసన్న గారు కూడా వచ్చారు. షష్ఠోత్సవం.
షష్ఠోత్సవం. షష్ఠపూర్తి కాదు సార్, షష్ఠోత్సవం.
ఎక్కడికో వెళ్ళిపోయాను.
కాదు సార్, వన్ మెంబర్ ఆస్క్డ్ మీ, అంటే గ్రూప్ లో పెడుతున్నాడు అనమాట, సార్ యు నేమ్డ్ ది రిఫ్రెషింగ్ వీక్ లాంగ్ వెబినార్స్ యాజ్ షష్ఠోత్సవం. ఆల్ స్పీకర్స్ ఆర్ above 60 years, sir. Doesn't differentiate between Shashtipurti and Shashtotsavam. So
No, I clarified, sir. I clarified for that. It is a 6 days program, Shashtotsav. I clarified anyway.
So we are fortunate to have the August presence of our CCM at the farewell.
Yeah.
6 long days programs.
Very nice.
Thank you, Chairman.
Thank you.
Thank you very much, Sharma garu, for your elaborate and excellent presentation. Even the chat box, so many members expressed their feedback as excellent session, wonderful session, like that. So it shows there are no queries because you have cleared all the doubts in the minds of members participated in this webinar. So no queries from the members, no more queries. Prasanna garu, will you be saying something?
No. It's a great program. My partners have seen. I've also logged in earlier also 2 occasions during this 6 days, webinars. For some time I was there, a little time. So it was a great thing. So I'm happy that all the local speakers have spoken and the talent of our local speakers come out. Normally we sell the Mumbai, Delhi metropolitan cities. So now we know what of talent to have, even grassroots level. With Sarma Chepping, I heard it for 15-20 minutes. These are practically we know what we are doing. Theoretically chapter veru, practically chapter veru. That makes a lot of difference. It's a great program. So
first time in the history of Visakhapatnam branch to have continuously for 6 days.
Correct.
First time. 6 days continuously.
Yeah. Continuously ఒకటి శర్మ అందరు లోకల్ స్పీకర్లు డేట్ ప్రాక్టీస్ లో ఉన్నది.
Everyone given excellent deliberations, sir. All the 6 days, everyone given excellent deliberations, wonderful presentations, sir. Really nice sessions we had, sir.
Yes. చాలా బాగుంది.
How do we account for? See, I have a doubt.
Sir, my Guru,
your form 3CD, you have place of keeping the books of account. Nowadays, everything is on internet and on cloud. Can I say that I am maintaining the books of account on cloud? How can that be? There's cloud accounting has come nowadays.
That is the reason audits also taking out for companies, not to have this type of
No
program.
audit required.
Okay, we will move 8:11.
Okay, sir. Thank you very much, Sharma garu, once again. Now I request our secretary Prashant Kumar to propose vote of thanks. It's a valedictory session for the entire SHASHTOTSAV 6 days webinars. I request secretary to propose vote of thanks.
Respected Chairman C.S. Muralikrishna Garu, Land Speaker, past Chairman of Visakhapatnam branch, CA M.V.Sarma Garu, and our Central Council member, CAS D. Prasanna Kumar Garu, CA past Chairman, my dear MC members, and other dignitaries. Good evening to all. I am privileged to propose vote of thanks to the last day session of a week-long webinar, SHASHTOTSAV of direct access on my own behalf and behalf of Visakhapatnam members. Sir, I convey my heartfelt gratitude for accepting our invitation and sharing your valuable knowledge for the benefit of the members. Sir, your experience, the deliberations on presumptive income and taxation in a procedural way with the excellent presentation covered exhaustively, sir. Sir, your special focus on critical issues like gross receipts, calculation of gross turnover, and its inclusives and exclusives, applicability of ICDCs, and maintenance of the books of accounts are very well, sir. And thank you for your 3 hours long seminar for our benefit of the members, sir. Thank you very much. Members, on 30th August, we have a physical seminar, and the topic is attest function by CS, care and caution by our Central Council member, C.D. Prasanna Kumar Garu. I request all the members, please join and get benefit out of it. Members, I convey my sincere thanks for supporting in conducting week-long webinar, SHASHTOTSAV of direct taxes, and given enough support to conduct further week-long programs for the benefit of the members. Our special thanks to all the speakers who had given excellent deliberations in a week-long webinar. I also extend my special thanks to C.M. Sharma Garu for his contribution and support in conducting the week-long webinar. And thank you one and all. Thank you very much.
I would like to thank Prasanna Kumar sir for arranging a special permission for this today's program and 30th program. Since we have crossed more than 10 programs, as per CPE, our branch size should be limited to 10 programs in a month. So this one will be the 11th one and 30th will be the 12th one. For these 2 programs, Prasanna Garu requested CPE chairman and arranged a special permission for us to conduct these programs. Thank you very much, Prasanna Garu. Visakhapatnam branch is always assured of anything from ICA with your support. You once again, you have proved that you are there for Visakhapatnam branch for anything and everything. Thank you very much, sir.